I had prepared for that meeting for 3 weeks. My logistics startup, ClearPath Delivery, was 18 months old and growing steadily. Real clients, real contracts, real numbers. All I needed was $200,000 to expand our delivery fleet and lock in 3 major clients already waiting on my answer. Before I continue, let me introduce myself. My name is Adrian Cole, an underestimated entrepreneur who gets humiliated by the banker and later becomes the controlling owner of the bank. I walked into Ironcrest Bank that Tuesday morning in my best suit. A receptionist directed me to a glass-walled office where Marcus Hale sat behind a wide, polished desk. Marcus was tall, well-dressed, and completely relaxed. He let me begin. I laid out my documents carefully: revenue projections, client letters, fleet cost estimates, and 18 months of clean financial records. I was 3 minutes into my presentation when he raised one hand and stopped me. He leaned back slowly, smiled toward 2 junior staff members standing near the door, and spoke loud enough for the entire floor to hear. "This," he said, nodding at my papers, "is the kind of fantasy people with no capital bring into real banks." The junior staff laughed softly. One of them glanced at me and then quickly looked away. I gathered my documents and walked out with my head held straight. Near the lobby elevator, 2 executives were speaking in low, urgent voices. I caught clear fragments: large financial exposure, keep it quiet, next quarterly report. I kept walking, but I had heard every single word. The afternoon air outside Ironcrest was warm and still. I sat on a bench across the street and stared at the building's glass front without really seeing it. Marcus's words kept circling in my head, not just the insult itself, but the easy laughter that followed it. The way everyone in that room had accepted his judgment without question. I had built ClearPath with personal savings, long nights, and 2 years of earning trust from clients before I could prove anything on paper. The business was real. The numbers were honest. None of it had mattered to Marcus Hale for even 4 minutes. My phone buzzed. Unknown number. I almost ignored it. Then I answered. "Adrian." The voice was calm and familiar. Victor Langford, a private investor I had met at a business conference 8 months earlier. He had expressed interest in ClearPath back then, but nothing had moved forward between us since. "I heard about the rejection," Victor said. I sat up straighter. "How?" "I have contacts inside Ironcrest," he said. "I want to ask you something. When Marcus turned you down, did he seem nervous?" I thought carefully about the meeting. "No," I said slowly. "He seemed completely confident." A pause followed. "That's what worries me," Victor said. Victor asked me to meet him that evening. He named a rooftop restaurant on the east side of the city, quiet, private, the kind of place where serious people had conversations they did not want overheard. I arrived to find him already seated at a corner table. Victor Langford was in his mid-50s, lean and unhurried. He had made his fortune in distressed asset acquisitions, buying things other people had decided were worthless and turning them around carefully. He had the patient eyes of someone who looked at everything twice before forming an opinion. He did not mention the loan. Instead, he asked me to describe the entire meeting inside Ironcrest. I walked him through it from the beginning: my presentation, Marcus's interruption, the laughter from the junior staff. Then I mentioned the 2 executives near the elevator. Victor set down his glass. "Tell me exactly what you heard," he said. I repeated the fragments as clearly as I could remember them. "Large financial exposure. Keep it out of the quarterly report. Something about timing." Victor was quiet for a long moment. He looked out over the city lights below us, turning something over in his mind. "You may have stumbled onto something important, Adrian," he said, finally. "What do you mean?" I asked. He looked back at me steadily. "I mean, Ironcrest Bank may be in serious trouble." Victor had not come to that restaurant by accident. He explained, carefully and without rushing, that he had been monitoring Ironcrest Bank for nearly 8 months, not out of any personal interest in the institution itself, but because of patterns he had noticed, the kind that appeared in struggling banks before they collapsed publicly Ironcrest had dramatically increased its commercial lending over the past 2 years. Large loans issued quickly to property developers with ambitious projects and thin financial margins. On paper, the numbers looked bold and profitable. But bold and profitable were not the same as safe. If the commercial property market shifted, even slightly, those loans could begin failing one after another. And if the largest one failed, the ripple effect could threaten the bank's entire stability. I listened carefully. You think that's what those executives were worried about? I asked. I think, Victor said slowly, that your loan rejection had very little to do with your business. That sentence landed differently than I expected. I had spent the afternoon blaming myself, replaying every slide of my presentation, wondering what I had done wrong. But maybe Marcus Hale had not rejected my loan because ClearPath was weak. Maybe he had rejected it because Ironcrest was. 2 days after our rooftop dinner, Victor asked me to meet him again. This time he brought someone with him, a woman named Natalie Rowe, who worked as a financial strategist specializing in struggling institutions. Natalie was sharp and direct. She spoke the way people speak when they have no patience for wasted words. She carried a thin folder, which she placed flat on the table without opening it right away. Victor told me what you overheard, she said. It was just fragments, I said. Fragments are enough when you know what to listen for. She opened the folder and turned it toward me. Inside were several pages of financial data, Ironcrest's publicly available reports, marked carefully in red ink. The bank is overextended, Natalie said. Their lending ratios are outside safe territory. Their liquid reserves are thin, and their largest single loan is tied to a commercial property development that is already running behind schedule. She paused and looked at me directly. If that project fails, she said, the bank will be in serious danger. I looked down at the pages. The numbers were unfamiliar in their detail, but the picture they painted was clear enough. What happens then? I asked. Natalie smiled for the first time. That, she said, is the interesting part. Natalie placed both hands flat on the table and said it plainly. The right group of investors, she said, could gain control of Ironcrest Bank. I stared at her. Then I laughed. Not rudely. I just could not help it. 3 days earlier, I had walked into that building asking for $200,000 and been told my plan was a fantasy. Now, a financial strategist was suggesting I could own the place. I came in asking for a loan. I said, I don't have the kind of money you're talking about. You don't need to, Natalie said calmly. That's not how this works. She explained it slowly and clearly in the way a patient teacher explains something to a student who is smart but confused. Controlling a bank did not require buying it outright at full value. When a financial institution was in genuine distress, regulators often encouraged outside investors to step in with capital. In exchange, those investors could receive ownership stakes, sometimes very large ones, at a fraction of normal market price. Banks in trouble are not like healthy companies, she said. Their value drops very fast, and the people who move first move best. I looked at Victor. He was watching me carefully. How fast? I asked. Natalie's team of analysts got to work immediately. Victor funded the research quietly through a firm that regularly examined the financial health of banks and lending institutions. The results came back within a week. Natalie walked me through them at the same table where we had first met. The picture that emerged was detailed and alarming. Ironcrest Bank had approved a single property loan worth just over $1 billion. The borrower was a commercial real estate developer called Harton Group, building a massive mixed-use project on the city's eastern edge. The project was 18 months behind schedule. Contractors had experienced significant delays. Costs had already exceeded the original budget by nearly 30%. The loan was secured against the project's expected completed value. But if the project failed to reach completion, or if property values in that area dropped, the security backing the loan would be worth far less than the debt attached to it. This is their entire balance sheet, Natalie said quietly. One loan, one project, one developer behind schedule. I sat with that for a long moment. A bank that had laughed at my $200,000 loan application had staked its entire future on a billion-dollar bet that was already going badly wrong. While Natalie's team was running numbers, Marcus Hale was having a very different kind of week. I learned this later, pieced together from people who had been inside Ironcrest during those days. But the picture was clear enough. Marcus had returned from our meeting in a good mood. He spoke about it openly to two colleagues that same afternoon, describing how he had handled another unrealistic entrepreneur trying to walk into a serious institution with an idea held together by hope. He used the word fantasy again. His colleagues nodded along. Marcus prided himself on protecting Ironcrest from borrowers who did not understand how real money worked. He had rejected hundreds of applications over his career and considered each rejection a small contribution to the bank's strength. Every loan he turned away was a risk he had personally neutralized. He believed the bank was strong because men like him were standing at its door. He had no idea what was building on the other side of that door. He had no idea that a billion-dollar bet placed long before I ever walked in had already begun pulling at the foundation beneath his feet. He was confident, comfortable, and completely unaware. That combination, I had learned in 2 years of business, was the most dangerous position any person could stand in. Victor moved carefully. That was the thing I came to understand about him during those weeks. He never acted without thinking 3 steps ahead, and he never hurried a step that required patience. He began reaching out to investors he had worked with before. People who understood distressed asset opportunities, people who had seen financial institutions stumble and knew how to position themselves before the fall became public knowledge. He did not need many. He needed the right ones. Over 2 weeks, he assembled a quiet group of 6 investors. I did not meet all of them at once. Victor introduced me to each one separately in different settings in a way that felt deliberate. He was letting them see me before deciding whether I belonged at the table. I asked him about that directly one evening. Why does it matter what they think of me? I said, I'm not the one putting in the money. Victor looked at me steadily. You are the one who will represent this group when it counts most, he said. Investors don't just back ideas. They back people. I thought about that for a long time afterward. Someone had once decided not to back me because they had not taken the time to look past the surface. Victor was choosing to look differently. The news broke on a Wednesday morning. I was at my desk in the small ClearPath office, reviewing a delivery route schedule with my operations manager, when the alert came through on my phone. A major financial outlet was reporting that the commercial property sector had entered a sudden and sharp correction. 3 large development projects in the city had stalled completely. Lenders across the sector were urgently reviewing their exposure. The Harton Group project was named specifically in the 3rd paragraph. I read the article twice, then called Natalie. She answered before the 2nd ring. I already saw it, she said. Her voice was calm, but precise, the voice of someone who had been waiting for exactly this moment. The project is being downgraded by 2 independent assessors this morning. Property values in that corridor have dropped sharply. How does this affect Ironcrest? I asked. It means their billion-dollar loan is now secured against an asset worth significantly less than what they lent, she said. They are underwater, and the market is starting to see it. I looked out the window at the street below. 3 weeks ago, I walked out of that bank with nothing. The world had looked one way then. It was already beginning to look very different now. The emergency meeting inside Ironcrest happened that same Wednesday afternoon. I did not know about it until later, but details reached me through a source close to the bank's operations, someone who had heard enough of what was said to understand how serious things had become behind the polished lobby and clean glass walls. The bank's senior executives gathered in a closed conference room on the top floor. The chief risk officer spoke at the front without softening a single word. The Harton Group loan was their primary concern. If the project could not recover value, Ironcrest's financial ratios, the numbers regulators use to measure a bank's health, would fall outside acceptable limits. Outside acceptable limits meant regulators would begin asking questions. and regulators asking questions was the beginning of a process that could end in forced restructuring. The executives were quiet when the chief risk officer finished. These were experienced professionals who had managed risk for years. But the silence in that room was not the silence of people thinking through options. It was the silence of people realizing their options had become very limited. Marcus was not in that meeting. He sat at his desk on the floor below, unaware of the conversation happening above him. He would not stay unaware much longer. Natalie called a meeting with Victor and me that Thursday evening. She arrived carrying a larger folder than usual and spread its contents across the table with the focused energy of someone who had been preparing for this exact moment. "Banks in this position don't stay quiet for long," she said. "Regulators will eventually force their hand. But before that happens, boards usually try to find investors on their own terms." She looked at me directly. "Ironcrest will begin looking for outside capital very soon. Probably within 2 to 3 weeks. The question is whether we are positioned to be the answer when they come looking." Victor nodded slowly. "We're close. We need to be ready before they get desperate," Natalie said. "Desperate boards accept terms they would never accept otherwise, but only if the offer comes from people they believe can actually stabilize the institution." She turned to me again. "That is why you matter in this, Adrian," she said. "Anyone can put capital on the table. Boards want to know who will actually run the institution." I had spent 18 months building a logistics company from scratch. I understood operations, planning, and making difficult decisions with limited resources. Maybe I thought carefully, those skills translated further than I had ever realized. Marcus Hale began noticing things that week. He was not part of the senior executive circle, but he had been at Ironcrest long enough to read the temperature of the building. He noticed the closed-door meetings that ran longer than scheduled. He noticed the quiet conversations that stopped when certain people walked past. He noticed the communications team had been asked to prepare a media strategy statement, which was unusual for a period with no announced changes. He asked a colleague about it casually. The colleague said nothing specific, but looked uncomfortable. Marcus started paying closer attention. He heard from a contact in the finance department that an outside firm had requested access to certain bank records, the kind of structured information request that sometimes preceded a formal review. That night, he called a friend at another institution who knew the city's investment circles well. "Has anyone been asking about Ironcrest?" Marcus said. His friend paused carefully before answering. "There are names being mentioned," he said, quietly. "What kind of names?" "Investment group," his friend said. "Distressed acquisition type. Victor Langford is one of the names." Marcus sat very still after the call ended. He did not yet connect that name to anything personal, but he was alert now in a way he had not been before. The document arrived through channels I was never asked to question. Natalie set it on the table in front of me without saying anything at first. She let me read it myself. It was a confidential internal assessment, the kind that banks produced for their own boards when things became serious. This one had been prepared by Ironcrest's chief risk officer 4 days after the market correction news broke. The numbers were precise and very bad. The Harton Group loan represented 41% of Ironcrest's total loan exposure. If the project was written down to its current market value, the bank's core capital ratio would fall to 3.2%, well below the 5% minimum that regulators required for normal operations. 3.2%. I was not a financial expert, but I understood what that number meant the same way anyone understands when something essential is nearly gone. They knew, I said. Before the news even broke publicly, their own risk officer had already run these numbers. They knew, Natalie confirmed quietly, and they kept it internal. She closed the folder. "This document changes everything, Adrian, because now we know exactly how exposed they are. And we know they know it too." The bank was not just troubled. I was afraid. Victor moved quickly and quietly. He had been watching Ironcrest's share price closely since the market correction news. Publicly traded banks in trouble tend to see their prices drop, but not always immediately. Sometimes the market is slow to fully absorb the scale of the problem. That delay creates a narrow window of opportunity. Victor's investor group began purchasing shares of Ironcrest Bank through 3 separate financial firms, spreading the purchases carefully so that no single transaction drew attention. Each buy was small enough to avoid triggering automatic reporting requirements. Over 5 trading days, the group accumulated a position representing just over 11% of Ironcrest's total shares. 11% was not majority control, but it was enough to guarantee a seat at the table. In a company facing the kind of pressure Ironcrest was now under, 11% of shares represented real influence, the kind that board members noticed and could not easily dismiss. Natalie monitored the purchases daily. Victor reviewed progress reports each evening. I watched from a position I still found strange, involved in something far larger than anything I'd ever been part of, and yet completely calm about it. I had learned in 2 years of building ClearPath that clarity produces calm. We knew what we were doing and why. That was enough. The story appeared on a Tuesday morning in the financial section of one of the city's most read news outlets. The journalist's name was Paul Cutter. He had been covering banking and real estate for 11 years, and the article he published was careful and detailed, the kind of piece that took weeks to report properly. Cutter had obtained information about the Harton Group project's financial difficulties. He had spoken to contractors, assessed development records, and compared the project's original cost projections against its current state. His conclusion was clear. The project was in serious distress, and the bank most heavily exposed to it was Ironcrest. He named Ironcrest directly in the second paragraph. By mid-morning, the article had been shared widely across financial and business networks. Ironcrest's share price dropped 6% before noon. Inside the bank, the communications team was in emergency mode. Executives were drafting a public response. The board chair had called an unscheduled meeting. Legal was reviewing every document connected to the Harton loan. The story was out, and once a story like that was out, the pressure it created did not ease. It compounded. Each hour brought new questions from shareholders, analysts, and other journalists who had seen Cutter's article and begun pulling at the same thread. The board of Ironcrest Bank met in an emergency session on Thursday evening. I did not know the specific details of what was said inside that room. What I understood came from Natalie, who had worked through enough of these situations to know how the conversation usually went. The board had 2 serious problems. The first was the loan itself, whether the Harton Group project could recover or whether it needed to be formally written down immediately. The second was more urgent. If the write-down happened before new capital entered the bank, the ratios would fall below regulatory minimums, and the institution would be placed under formal regulatory supervision. Formal supervision was not the same as failure, but it was close enough that most investors and customers treated it that way. It would accelerate the share price decline, damage depositor confidence, and almost certainly force outcomes far harder to manage. Their only real option was to find outside investors before regulators acted. The board authorized their advisors to begin confidentially approaching investors who had both the capital and the credibility to stabilize a financial institution of Ironcrest size. Within 24 hours, one of those advisors reached out to a firm connected to Victor Langford's group. The call Natalie had predicted 3 weeks ago had finally come. Victor called me the morning after the board's approach. He spoke directly, the way he always did when something was decided rather than still being considered. The board wants to meet, he said. They are exploring external investment. Their advisors know my name. What does that mean for me? I asked. It means I want you to represent the group at the negotiating table. I was quiet for a moment. Victor, there are people in your investor group who have been doing this kind of work for 30 years. I said, why would I be the representative? Because you built a business from scratch and kept it honest when cutting corners would have been easier, he said. Because you walked into that bank with genuine numbers and were still dismissed without a fair hearing. And because the board of a troubled institution needs to believe the person across the table understands what it means to hold something together when everything is pressing against it. He paused. "You understand that better than anyone in my group," he said. "I've watched you for 3 weeks. I'm certain." I thought about that office, the glass walls, Marcus's easy smile, the word fantasy. "All right," I said. "I'll be there." Natalie and I spent 3 days preparing the proposal. It was detailed, structured, and left nothing to interpretation. The investor group was offering to inject $150 million of fresh capital into Ironcrest Bank. That injection would immediately repair the bank's capital ratios, bring them above regulatory minimums, and provide a stable foundation from which the Harton situation could be managed in an orderly way. In exchange, the investor group would receive 54% ownership of the bank. Controlling interest, the existing board would remain in advisory roles during a transition period of 12 months. After that period, governance would shift to a structure the new ownership group designed. It was a significant offer. Not because of its generosity, the terms were firm, but because it was real, backed by verified capital and capable of moving quickly. Speed was the most important thing a struggling institution needed from an investor. Every additional week of uncertainty cost the bank customers, staff, and credibility that were very difficult to recover. Natalie reviewed the proposal 4 times before we printed it. "This is clean," she said finally. "It's the kind of offer a board in this situation accepts." I straightened the pages carefully. The meeting was set for the following Monday morning. The board's lead advisor called Victor the Friday before our Monday meeting to confirm final arrangements. It was a routine call, room, location, attendees, the planned timeline for the session. At the end of the call, the advisor asked a standard question. He wanted a full list of the names representing the investor group who would be present at the table. Victor gave him the names. Mine was last on the list. The advisor recognized it immediately. He asked Victor to confirm the spelling. Victor did. A pause followed. Later that afternoon, the advisor called someone he knew inside the bank to quietly verify something. That someone mentioned it to a colleague. By the end of the business day, it had reached Marcus Hale. Marcus called Victor directly that evening. Victor told me about the call afterward, word for word. Marcus's voice was controlled, but not entirely steady. "Is Adrian Cole representing your investor group?" he said. "He is," Victor said. A long silence followed. "The same Adrian Cole who came in for a loan application recently?" Marcus said. "The same," Victor said. Another silence. Then Marcus said something that Victor repeated to me with quiet satisfaction. "I see," Marcus said. That was all. Monday morning arrived cold and clear. I drove to Ironcrest Bank in the same car I had driven there 3 weeks earlier. I wore the same suit. I carried a briefcase instead of a presentation folder, but the feeling of the morning was familiar in ways I had not expected, the same steadiness I had trained myself to carry into difficult situations. I was not nervous. Nervous was for situations where the outcome depended on impression alone. This situation depended on numbers, and the numbers were sound. The boardroom was on the 6th floor, a room much larger than Marcus's glass office. 8 board members were seated along one side of a long table. 2 legal advisors sat against the wall. The board chair, a serious woman named Eleanor Briggs, sat at the far end with an expression that told me she had slept very little that weekend. I sat down across from them, opened my briefcase, and placed copies of the proposal in front of each person. Then I looked up. 2 of the board members recognized me immediately. I could see it, a slight shift in their posture, a quick exchange of glances between them. I kept my expression calm and steady. "Good morning," I said. "Let's talk about the future of this bank." The negotiation lasted most of that Monday and continued into Tuesday. The board pushed back on the ownership percentage. Their advisors argued that 54% gave the investor group too much control relative to the capital being offered. They suggested 40% as a more balanced arrangement. Natalie had anticipated this position exactly. She had prepared a clear response. At 40%, the investor group could not guarantee the governance stability that regulators would require as a condition of approving the transaction. Regulators did not trust split ownership in distressed institutions. They wanted clear, decision-making authority in the hands of whoever was injecting capital. The board discussed this privately for an hour. They came back without changing the number. Late Tuesday afternoon, a formal message arrived from the city's financial regulatory office. It was addressed to Eleanor Briggs. The office was requesting a meeting regarding Ironcrest's capital ratios. The regulatory clock had started. Eleanor read the message twice. Then she looked across the table at me. "If we accept your proposal," she said quietly, "how quickly can the capital move?" "Within 72 hours of signing," I said. She looked at her advisors, then back at me. "We need to speak privately as a board," she said. "Take whatever time you need," I said. The board returned after 90 minutes. Eleanor Briggs sat down across from me without preamble. "We've reviewed the proposal in full," she said. "We've spoken with our legal advisors and with the bank's independent auditors." The room was completely still. "The board has voted to accept the terms as presented," she said. I kept my face composed. Natalie, seated to my left, made a small note in her folder. The agreement was signed that afternoon in careful stages: board members, legal representatives, Victor's group counsel, and finally myself as the designated representative of the investor group. The signatures were witnessed, the documents dated, and the capital commitment formally activated. At 4:37 that afternoon, the investor group, led by Victor Langford, with Adrian Cole as named representative, became the controlling owners of Ironcrest Bank. I sat quietly in the room after most people had left, looking at the signed documents on the table in front of me. I thought about the Tuesday morning 3 weeks earlier when I had carried my presentation folder through this same lobby and been laughed out of a loan officer's office. The same building, the same glass walls, the same polished floors. Everything else had changed completely. I returned to Ironcrest Bank that Thursday morning in a completely different capacity. There was no need for theater. I did not announce my arrival loudly or make a point of my new position. I simply walked through the lobby at 9 in the morning, signed in at the reception desk, and took the elevator to the top floor. The staff had been informed the previous day that a transition in ownership had been completed. They knew the name of the new controlling group. Several of them already knew my name. As I walked through the floor, the atmosphere was not hostile. It was careful, the kind of respectful attention that people offer when they are uncertain about what to expect. The receptionist on the executive floor stood when I approached. "Good morning, Mr. Cole," she said. I thanked her and asked her name. She told me. I used it. Eleanor Briggs met me at the door of the boardroom and shook my hand firmly. She looked tired but composed. "The floor is brief and ready," she said. I nodded and walked inside. The room was set up for a full staff address. Department heads, senior managers, and team leaders had gathered from every floor. Marcus Hale was seated near the back. He was looking at the table in front of him when I walked in. I spoke for 12 minutes. I told the staff that ownership had changed, but the institution's purpose had not. Ironcrest existed to serve clients and communities, and that purpose would be honored with more discipline and more care than it had been recently. Then I announced the first policy change. Every loan application submitted to Ironcrest would now be reviewed by a two-person team. No single officer could reject an application alone. Every applicant, regardless of the size of their request, would receive a written explanation of any decision and a clear process to appeal it. The staff listened quietly. Then I said something I had decided to say several days before I ever walked into that boardroom. "Power belongs to those willing to be held accountable for how they use it," I said, "not to those who use it to protect their own comfort." After the address, I walked back through the floor and paused at a familiar office. Glass walls, wide desk, the same room where a man had once pointed at my honest work and called it a fantasy. Marcus stood beside the desk. He looked at me directly for the first time since everything had changed. I crossed the room and shook his hand. "The institution needs experienced people," I said quietly. "Do good work." Then I walked out into the corridor, past the lobby where I had once overheard a whispered secret, and stepped into an elevator that now carried me somewhere very different. Once again, if you enjoyed this story, subscribe to the channel and tune on notification. I will see you all in the next video.